Exercise 917 requires you to depreciate an asset using the double declining balance method, or DDB method. The given information is given here, comes from the textbook directly. I translated that into an Excel spreadsheet format. So as you can see, it's the same thing. Equipment purchased at a cost of $39,000 at the beginning of the year 2012, has a useful life of 4 years, and has a residual value estimated at $6,000. Now notice that for the use for the unit production method later, you'll be able to use the last bit here, but it's not really relevant to DDB. Keep in mind that down here I've given you sort of some guidance for how to solve the problem. Cost minus beginning AD, AD meaning accumulated depreciation, equals beginning book value times the depreciation rate, which happens to be 1 over the useful life times 2, and that will give you a depreciation per period. Given that, we go now to the to the second tab here, calculation. So I go there, and that's exactly what we were doing here. We here have the information in front of us here again, but here's another calculation for the first year here. Cost beginning AD. So we begin with the book value of the same as the cost, $39,000. The depreciation rate is 1 over the life, so 1 over 4. That will give you 25% times 2. So the depreciation rate under this method will be 50%. 50% times the beginning book value will give you a depreciation amount for that first year of $19,005. Now I put this in here just in case we have a an in-service date that is later in the year, and so we could actually calculate the proportion of the year to come up with something else other than over the depreciation for a period other than 1 year. So in this case, we end up with a depreciation for the period, which is again the year, of $19,500. If you then also calculate the book value for that first year at the end of that year, you would see that is $39,000 the cost minus the AD, which comes from the first year depreciation of $19,005. So the end of the year book value will be $19,005. The following period, we begin the year with a beginning book value of $19,005. Depreciation rate is the same as before, 50%, so the depreciation for that second year is $97.50. So the book value for that second year would be cost of $39,000, AD of $29,250, which is $19,500 from the previous year, plus the current year depreciation of $97.50. So the ending book value will be $97.50. Now in this scenario, we are switching to straight line in the third year, and to do so we begin with the ending book value. That will be our cost when we switch. So we no longer use this cost that we were using before. We start with the book value as of the beginning of the switch, in this case the beginning of December of 2014. So given that, and still a residual value of $6,000, we have a depreciation base or depreciable cost. Because remember, now we switch to straight line. It's a different calculation here. We have a depreciation base of $3,750. The life left for this asset at the at this point in time would be only 2 years. So 1 over 2 will be 50%. 50% of depreciable cost of $3,750 gives you a depreciation for that third year of $1,875. So that will be the depreciation for the third year. Now we got the cost of the asset. The adjusted cost is $97.50 minus the AD of $1,875, giving you an ending book value of $78.75. Then we continue on for the fourth year at $97.50. That's again the same cost as we carried from the previous year. Residual value is the same, 6,000. Depreciable cost also the same, 3,750. Depreciation rate 1/2, again 50%. So it will be the same amount for the second year and last year. And so given that, we've got a cost of 97.50, AD of 37.50. So the book value end of the fourth year, end of the life actually of the asset as well, will be the same as the residual value, which makes sense, $6,000. And now with respect to the recording, we just simply see the journal entry for depreciation expense here for each year. So we have a debit to the expense account, and the AD is credited for those amounts that we calculated in the previous sheet.